We heard from President Trump saying very good things are happening on the Strait of Hormuz. I mean, in your conversation with traders in touch with the vessels on the Strait of Hormuz, what's happening there?
Well, we need to compare what is happening now to what was happening 6 weeks ago. 6 weeks ago, the strait was open. After the attack by the U.S., the strait is closed. Now, Iran has allowed some ships to go through, and at the moment, there are 3 VLCCs that got out most recently. 2 are from Saudi Arabia, 1 is from Iraq, and they're onto their destinations. But now that the oil is flowing, the U.S. is saying, let's close it up again. So this is really, in one word, demented. It makes no sense what the U.S. is doing because they are so focused on Iran that they're losing sight of what they're causing to the world. And the pain is in Asia, the pain is in the South Pacific, the pain is in anybody that depends on oil. In addition, most of us are only focused on oil. But there's fertilizers, there's aluminum, there's food. If you close the strait as the U.S. is intending to, what's going to happen to the food into the region? I mean, there are so many implications here. Many airports in Europe are already saying that they're going to run out of jet fuel in 2 to 3 weeks. And we already have kind of semi-riots in Ireland. I mean, the world is really falling apart. When you
what's your understanding of this blockade? How might this take place? What form?
Yeah. There is the version that Trump put out on his Truth Social. And he was going to stop any vessel that pays the Iranians any money. To begin with, that money will be paid in yuan or in Bitcoin. So there's no way for the U.S. monetary system to trace it. That's number one. Number two, who are you trying to punish? Only the Iranians or every other producer in the region, like Saudi Arabia or Iraq? So in the latest version that is coming out after Trump's Truth Social is that they will only stop the vessels that come from Iran. And the rest will be free passage as the Iranians control on the other side. If they do that, a lot of that oil goes to China. So then the U.S. would be stopping vessels that are into China. What does the Chinese Navy have to say about that? This is very dangerous because now we're transforming a regional fight into potentially a global fight. So with the traders this morning, they're kind of relaxed because we all think that this is too crazy to block it on both sides. It really makes no sense because the one that you're punishing is the Asian consumer first and the European consumer second.
So are you then saying that the prices we're seeing this morning is not reflective of the risks out there?
Absolutely correct. The number we saw this morning, 103 or whatever, 8% increase, is not reflective at all of what could happen if the U.S. really at 10 p.m. or 10 a.m. their time decide to go with this interdiction. It really makes no sense. It should be 140, 150, whatever.
Today, it should be 140, 150.
Correct.
And when do you see that happening? I mean, why is there such a mispricing? What are traders actually missing out?
Or maybe pricing in would be the thing. One of the traders I spoke to yesterday is Trump will tackle again. Because the pressure that he will be in that office to say, please don't do it. You saw already overnight that Britain said they won't participate in the blockade, and this morning that Australia won't participate in the blockade. Because they're not crazy. They will not commit suicide. This is economic suicide for the region. So what I am surprised about is that China and Korea, who depend very heavily on oil coming from the Arab Gulf, are not making any noise. It's like they just take the punches, right? They should say, hey, we need the energy. Singapore needs the energy to run the refineries.
What is the extent of disruption right now, and what would be the disruption be like should this blockade be successfully implemented?
Okay, the current loss is, call it 7 to 12 million barrels a day. But if Trump does what he says, then we will lose fully, forever, those 12 million barrels a day. The Gulf kind of ships out 20 million barrels a day, but the Saudis are creating the alternative via Yanbu. So maybe the net bottled in after you do all the infrastructure work is only between 13 and 15 million barrels a day. But then you have LNG, you have fertilizers, you have a lot of things that come out of the Middle East. So the implications for the world are very dire, because that means that global GDP coming from that area is reduced between 10 and 15%. That's massive.
But Jorge, there are alternative routes, right? Like the Red Sea, it is an alternative route. I mean,
no.
Can all the oil that passes through the Strait of Hormuz seek alternative routes? How much of that can seek alternative routes?
Well, you would need to build additional pipelines to do that. But the pipeline, and Aramco made a statement yesterday that has roughly 7 million barrels a day eventually available. Is not that amount is not flowing. But then there is another strait that is essentially controlled by the Houthis in Yemen. There's no alternative. The world needs to think that there needs to be a negotiation with the Iranians to calm things down. What they did yesterday, which was maximalist demands by the U.S., including for the Iranians to recognize Israel after the Israelis had essentially beheaded their leaders and religious leader, is not a reasonable request to have done. It just means we're going to show you we're the boss. So the Iranians are saying we're not listening, we're walking off, which they did, right?
You talked about how Asia will be hit in a big way. Can you quantify that? And which countries in particular do you see being hurt the most?
It's like a pipeline that's being shut off. So the big ones that are being affected are Korea and Japan. Then potentially Singapore as a refining center. But Australia is already running out of diesel. And the Pacific Islands that depend on vessels that are delivering to New Zealand and Australia and then supply those far-off Fiji, all those islands in the Pacific, they are really exposed. But in terms of major economies, is Japan and Korea are the big ones. And they have no option. There's no alternative.
Who has the pricing power right now? Is it the refiners?
No, not at all. They have to pay what the market can bear. I was talking to one of the traders that supplies one of the refineries here, and he is saying, we're looking at alternatives, but all the alternatives are expensive. And there is not enough oil in the world to supply what is being lost by the constraints in Hormuz. There just isn't. There has to be demand destruction. And for demand destruction to happen, then the price of oil needs to go to $150, $200. So already we see some demand destruction in the airlines, which are shutting down planes, right? So the Philippines is in a lot of trouble, really in a lot of trouble, because they depend on all these refined products and crude coming into their country. So Asia is really getting punched hard. But I don't see the countries making sufficient noise to tell Trump, stop it. Why did you start this? Why don't you negotiate in good faith? I mean, this trade was open before Trump started.
Does the U.S. have pricing power?
Oh, yes, because they have energy. So they are net beneficiary, big time net beneficiary. They're exporting a lot of crude oil and LNG. And as you can see from the tweets from Mr. Trump, a lot of vessels are going into the U.S. And yes, Japan and Korea are looking at the U.S. to replenish their oil. So is India.
So in your opinion, I mean, you've been watching oil flows for decades now.
Yes.
Has the supply chain fundamentally changed? And in the longer term, what are we expecting?
In the longer term, definitely everything has changed, and everybody's going to be looking at resetting their expectations on risk, because this was not in anyone's, to quote one of my colleagues, this was not in my bingo card. Nobody was expecting this. But in the longer term, the exposure to the Middle East is very high, but there is no option. Maybe they need to look more at renewables. But also the destruction of the refineries. So products are going to be higher than they need to be. I was talking to a taxi driver yesterday here. He was paying for his diesel $1.80 before this mess, and now he's nearly paying $5 per liter. That's quite a jump, right? And we will see more of that.
And for traders, where are they making their money? Is it in arbitrage? Is it in volatility?
Yes.
You're in conversation with them.
Yes. The main things are arbitrage and volatility. You need to speculate a little bit on price direction, which I think some in the U.S. administration know better how to do. So some of the very professional houses in trading have not been having a good time, and there are a lot of reports in the Wall Street Journal and Bloomberg about such things. Your organization has been covering quite well. So it's not that easy, but they're very good at arbitraging, right? If Korea needs a cargo that is no longer available from the Gulf, is this cargo going to come from Africa, from the US, from Latin America? And that's their job. They just try to patch things up.
Jorge, before we let you go, if you were to predict the price of oil, on average for the rest of the year, where do you think we will stand with that?
Oh, we're going to stand much higher than we have been.
Which is?
Before the war, we were closer to 65, right? Right now, if Trump keeps on doing these things, we're going to be over 100. I think the pressure is going to be on him to throttle things back. So it wouldn't surprise me if for the rest of the year we hang closer to 100 but below it.